If I were to characterise why the Living Bridge UK Microcap Fund is different and distinctive from its competitors in the smaller company space, I'd say firstly it's to do with what we actually invest in. So we focus on genuinely smaller companies. We're concentrated around the smaller end of the market, below 250 million market cap, which we call microcap, and that's actually quite different to most of the UK smaller companies funds, which typically invest in slightly bigger companies. There is a perception that smaller companies are inherently higher risk than larger companies, and to a certain extent in aggregate that's true, but what we try to do with our process is to address and reduce some of those potential risks. The first way we do that is through our filtering process. So we try to avoid certain sectors and avoid certain characteristics of companies that we believe to be higher risk. We focus on 4 core sectors. Those are TMT, technology, media and telecommunications, consumer, business services and healthcare and education. And that means we avoid sectors like oil and gas, resources, some areas of financials, and we also avoid deliberately earlier stage companies, which means we don't invest in biotechs or the very early stage sort of high growth tech companies. Living Bridge UK Microcap Fund is designed to deliver strong double-digit returns over the long term to clients, and I've been managing the fund since May 2009 when it launched and managing it in that way to deliver that objective, and so far we've managed to achieve that. Smaller companies should form a core part of any investor's portfolio, and the reason for that is that they offer genuine growth potential. The other thing that's interesting about smaller companies is that typically because they're less well researched and because they're less well known, they actually trade at a valuation discount to the wider market. So if your process is able to navigate the complexity of the area and some of the risks in smaller companies, you actually have the potential to create value in two ways. One, from the earnings growth of the company over the life of your investment, but also through the valuation multiple expanding as the companies become better known and more widely researched. And the combination of those two things means you have a portfolio that has the potential to really outperform the market.